On the one hand, you've got the resurgence of King Dollar, this idea that, US exceptionalism when it comes to the stock market is perhaps back in play with the soft landing scenario. And then there's China. Where do you find value at this point?
Yeah, so we do. There's a fair bit of value in China if you look through the cycle. When we look at the free cash flow generation, you look at the PE ratios that are down to historically low levels. I think it's important to remember that there is still growth opportunities in China, and I think despite the weakness in the economy, and so we do focus on where those opportunities are. I would just like to, if I can use an example, like stocks like PDD and NetEase are up about 30% year to date.
Are those opportunities in property at this point, Lorraine? Are you sort of brave enough to venture into real estate in China?
I think you have to be brave to venture into it. There are couple solid companies that we do like. One of them is Kohli. We're looking at this as that they're going to have to continue to push through policies to support the real estate industry. It's so important to overall consumer confidence in China. So companies like Kohli that are financially strong, that have the ability to sort of benefit from picking up land bank, good quality land banks at the moment, plus having a portfolio that's more focused in the tier 1 and tier 2 cities where there isn't as much weakness in terms of demand. I think those are the companies that we're looking at. They're state-owned enterprises, yes, so they do have always had some advantages, and that's, I think, where we're focused at. Very, very selective.
Lorraine, have any of the measures that China has taken since the Politburo meeting, and really even just in the last week, have they changed your mind at all about China's recovery, what might be possible, and how soon it might be possible?
Yeah, we've had to push back. Like many people, we've had to push back our expectations. We were hoping that consumer confidence would stabilize the second half of the year. But at this point in time, we're looking more at a 2024 outlook for that, for some of the policies to come through for the real estate space to basically sort of stabilize. So until then, I think it's going to be very sluggish. The government is, and this is we've had this view for quite a long time, the government remains focused on the debt, and therefore the fiscal expansion is going to be quite measured. Unfortunately, that means we're expecting a period of slow growth in China. We only expect an average GDP growth of 3 to 4% through 2027.
Now, we have seen, most of the earnings come in, and they were generally in line, and I know that guidance was cautious, but at the same time, if earnings continue to come in line, will that be enough to attract investors back, particularly foreign investors, or does it have to be more economy-wide and broad-based a recovery for investors to come back in?
Yeah, so unfortunately, there are some global headwinds as well. We're, expecting global growth to slow in 2024. So it's going to be hard. It's going to be difficult to say that investors come back full force in a broad way. I think the macro measures in China need to be more evident before that happens. But in the meantime, certainly there are buying opportunities out there for good quality names, and that's where I think it's important to pick those carefully. As I mentioned, there are sectors that are doing well. The domestic story is still going to be there. We do expect ultimately, while overall GDP growth is going to be slower than we're used to, the consumption growth will probably lead that over the next 5 years. So we're still focused on the domestic consumer story for the most part in China.
And Lorraine, some of these companies that are part of your stock picks, BYD is one that I've looked at specifically. This is also a global story, not just a domestic market share story.
To some extent, yes. I mean, when we look at things like one of the opportunities that we see is BYD. BYD obviously did very well in the first quarter, very strong growth. The segments that were, it's well positioned. We see the product suite that it's going to launch over the next few months. That's going to keep growth pretty firm. So the pullback in the share prices of the EV car manufacturers the past few months, for example, we probably see this as a buying opportunity, particularly for BYD, that we see as a high quality name as well. And so there, what I would say is that yes, there are some global stories out there, because we also want to face the fact that there is going to be some pickup in global growth post in the second half of 2024 as interest rates come down. So that is definitely a global story that we want to focus on as well.